Welcome to Disruption Blueprint with Shannon Spotswood from RFG Advisory. We've built an award-winning platform with innovative technology, comprehensive service, and a team of individuals who are experts in their field to serve advisors. Join us for this journey where we explore everything that has to do with running an independent advisor practice as we bring together industry experts and innovative minds who are on the bleeding edge to challenge the status quo, foster new ideas, and create a path for advisors to unleash their growth potential. Now, on to the show.
Welcome to Disruption Blueprint. I'm Shannon Spotswood, and I'm your host, and I'm so fired up to be back in the studio with one of my good friends and one of my favorite people in our industry, Doug Fritz, co-founder and executive chairman of F2 Strategy. Welcome, Doug.
Thank you, Shannon. This is a pleasure.
I love that you're coming to us live from one of the most beautiful places in the country. Tell us where you are.
I'm in Sea Island, Georgia for the Pershing Elite Summit. It's sort of some of Pershing's like larger aggregator kind of clients, all stressed, struggling with the same stuff. I think we'll probably touch on some of these things today. But yeah, it's gorgeous. It's like 60 degrees in March in Georgia, and the pollen hasn't started yet. So it's like that little sweet spot of springtime, but not disastrous on allergies.
Oh, I love it. I love it. Well, anybody who's a frequent listener or, we get to kick around in conversation knows that I am hugely passionate about technology. RFG from the get-go, we've been a client experience company first, a technology company second, and a platform serving independent advisors third. And so to have you, F2 is, in my opinion, the premier wealth and technology consulting firm. You've just built an incredible business alongside your amazing, amazing wife, Liz. So congratulations on the just transformational impact you're having on our profession and being such a light in a very confusing, clustered, lots of technology out there world.
Thank you. It's winners like to be around winners, as they like to say. So right back at you, Shannon. It's great to be associated with RFG.
So we're going to talk about, I think, all the key buzzwords du jour, AI, data, change management to get us started. So I thought what we would do is peer into our crystal ball and just dig in on those three topics, starting with AI, moving to data, and then landing on change management. So AI, obviously, a ton of buzz around that I don't even want to call it a topic. It is a transformational societal change. We cannot underestimate and I think understate the moment in time that we are living in. This is an industrial revolution, a digital revolution with AI. There are so many cool technology solutions that are popping up on a daily basis, literally a daily basis. And it is very clear from just G1 of these AI solutions that this is going to be game changing in terms of a productivity enhancer. It will reshape how advisors build their firms and deliver their client experience. So I want very broad questions. What are you excited about as it relates to AI? What are you worried about? And how do you think it's going to shape the future of our profession?
Yeah, it is undoubtedly the main topic. You can't read a white paper or go to a conference, read a headline without somehow those two letters popping into the conversation. And in general, that's just like macro. It's kind of good. We're an industry that can, if left unprodded, sort of fail to move forward. And that's because we're very people oriented. We've got, societal demographics of our advisors typically that sort of don't necessarily help us move as quickly as we otherwise would. But they're probably, on the whole, I'm personally excited about it. But I'm also very cautious. And I think, I think there's obvious signs of where it's paying off. But I'm also very aware, and I've been in this industry doing roughly the same thing for about 27 years. The propensity of our industry specifically to get really hyped up well before any kind of real value gets delivered is high. And you go back to, I can go all the way back to UMH days in the late 2000s, where UMH was going to be this unified, my entire financial life in one place, and it kind of never fully materialized. There's versions of that are getting closer, but it's like 20 years on, we're starting to see more of it. We saw robo-advice suck up a lot of attention, energy, and unfortunately innovation capital for wealth firms. That as you just saw, the Ellevest robo got basically sold off to Betterment last week. We got really excited about it. People spent a lot of money, and we didn't see the value get delivered. We saw direct indexing 2 years ago really take off, and people were really excited about direct indexing, adding value to their clients instead of some solutions that were implemented. There's still direct indexing. It's a lot of clients have it in portfolio, but the zeitgeist around it has gone down a little bit. I lead with a cautionary comment because as we think about AI, and as we listen to quote unquote experts talk about AI, how do we know what to listen to and is real versus people trying to get us excited to part with our cash because their business model is to get you excited, spend a lot of money on a product or a strategy, and kind of it doesn't really deliver. And so we're always a little bit cautious that to focus on value that our clients can spend money on that's proven to deliver value. And so there's a cautionary tale to begin with. The cool part about this is there really are evidence of value that's coming out of this shift. And I think the predominant value that we're seeing from AI right now are in the amount of time, like human time, that it is saving some of our most expensive employees, our advisors, in terms of the meeting preparation, post-meeting task management, and client communication. And that's the AI that's actually transcribing and initiating tasks off of either in person, recorded on a phone, or on video contacts with our clients. And because it's taking notes, it's sort of like an angel on our shoulders of listening to what our clients are saying, recording that for a period of time, getting that information to be usable in the future so that our sort of, mammalian brains don't have to track every single theme. The AI is helping us pull some of those themes forward from previous conversations, as well as making sure that when we say we're going to do something or clients that are interested in something, we have the task and then the content and the machinery to go execute on it. We can send that report about inflation. We can send a report about preparing for generational wealth transfer, et cetera. So it's saving evidence from our clients are that as they get into implementing these tools, it's saving them 2 to 4 hours per week per producing advisor. And that is an astonishing amount of time that it's giving back to advisors. And the work that it's taking away from them is pretty busy work, right? It's kind of operational, combing through statements, taking notes, bullet pointing things. Not, I wouldn't say really value add, cathartic things with the clients. So I'm super excited about where it is. That's the client contact side. I think when we think about other areas, there's just these, as the number of AI tools is increasing, the numbers of areas that AI is also sort of going into is also increasing. And so that's sort of ever expanding scope of just what it could do. The client communication task management we love. On the Gen AI side, still, I think we're a little bit far away from getting AI to write client communications sort of organically, sort of like the way we use ChatGPT for clients. It's probably going to take a while just because of regulation, but internal use of sort of search engine, find me information or find me clients that look like, or find me these kinds of things. I kind of think about it as like an internal Google, but with context. That's also saving people a ton of time. And it's at some point, someone's going to coin this phrase. It's not me, but it's sort of the return on time or return on like effort searching for things. And that's also a huge win for AI.
ROT, baby. Return on time.
Because it's a concept all advisors understand, like ROI.
Right.
How much am I getting back for the time I'm spending?
How long do you think it will take, either in months or years, for widespread adoption on AI tools for note-taking, task management? We've rolled this out already in our tech stack with Zox. We have seen, I think 2 to 4 hours per week is honestly conservative. I think the number, we're just starting to track it. So I'll have a better sense of where that data stacks here in, 6 to 8 months. How long do you think it will take for widespread adoption of that?
It'll go fast because it's such an easy plug-in. It's like in a Lego blocks concept, it's like the Lego block of your CRM exists in almost every organization at this point. And the Lego blocks of the call recording function like Teams or Zoom already exists. And so it's really stitching two concepts together relatively quickly. And so I think we're going to see by the end of this year, probably half of the, materially sized advisory businesses like those over $500 million will have some version of these tools. They're priced competitively. The value add is very clear. It already has a track record, and you can, folks like RFG that are already using it out there publicly, half by the end of this year.
There's a headline grabber.
And other AI products as well.
I can't wait to get that one in the headline. I mean, you heard it here first. By end of 2025, 50% of advisors will be leveraging AI tools for client meetings, task management, follow-up. I mean, so I think I was reading about that. I'm sure you saw that new McKinsey study that just came out. And this is where I think the intersection is pretty interesting. So they were talking about in this study, the shortage of financial advisors. We're not doing a great job as an industry of attracting new talent. Obviously, average age of a financial advisor is north of 60, call it 64, 65. So by their math, they're saying by the year 2034, 9 years from now, we will have a shortage of 100,000 advisors. At the same time, which is really interesting, the demand for advice is increasing exponentially. So they're projecting over that same period that the number of households that are seeking advice is going to increase by 30%. So we got the number of advisors going down. We got the number of clients going up. And so the bottom line is, and I will stand on this soapbox all day long. We talk about it all the time. We think about it all the time. You're helping us really optimize workflows and build the scale necessary, is that advisors have got to become more agile in serving more households, not fewer, in delivering a personalized experience across more households that are appropriately tiered, and technology is being leveraged where technology is best suited. So I think that this is when you overlay what you just said as it relates to AI and the demographic factor of our industry, it's pretty fascinating. I mean, we can't get there in serving all of these clients and meeting all this need without some pretty significant productivity hacks.
Couldn't agree more. Like it's a solution that's going to meet this like critical crushing demand of our industry. Just to kind of go along that thread, so many of our larger aggregator, fast growing firms are PE backed. When we start tracking efficiency of hour of an advisor, like that as a measure, which we don't really right now today, we start looking at how efficient can one advisor, how many households can one advisor manage? That number starts getting tracked. It'll also add to valuation increases, and it'll help add some of those resources to making advisors more efficient. Now, when people hear that, I'm just thinking of the audience right now. Somebody's going to listen to that and say, well, but what's the quality of advice, the time you're spending? If you're going from 120 clients to 340, over the course of 5 years, what's the quality of advice that I can give to those clients? I'm not spending that much time with them. That's where the other parts of AI start to fit in, about automatically taking what the clients are interested in, they've told us, and getting content. And if you've been an advisor, you the immediate thought of the value is how much face time, right? Like conversations like we're having right now equal the value. When you look at studies of investors over a long period of time, with less than the last 10 years, the propensity to get advice through things that are not the advisor talking to them, white papers, videos, short form quizzes, how-tos, things that they can read, share, ingest that are outside of an advisor, sort of advice beyond the advisor, really impactful. And so where the content that we're capturing during meetings can lead to for every like 1 hour that I spend with my clients, that client has 5 to 10 hours of independent content that I'm sending that they're engaging with. Actually, the NPS of those high quality contacts keeps that client really, really happy, regardless of how many hours they spend with an advisor. Great opportunity for other technology to come in.
I can't underscore more passionately, enthusiastically, like put bright flashing lights around what you just said. We talk about this all the time, and it's really fascinating. The studies will tell you that if you are consistently communicating with your clients via video, they will report that they have had more contact with you and more communication from you that is, to your point, 5 to 10x the number of FaceTime meetings. So just that simple productivity hack of I'm going to take the time, whether it's monthly or quarterly, to film a communication for my clients. It can come on the investment side. It can come on the holistic financial life side. There's so much that you can pull from in terms of topics, but going through that and then systematically scheduling that through your newsletter or whatever it is, your email communication, that alone, the client feels like they're getting a higher touch. So all of these righteous, I'm not going to be able to deliver the quality of advice, like you can whistle that all you want into the rearview mirror, because that is not where the future of the industry is going.
Yeah. You look at the math on this is fascinating. So we do, some of our clients, we do deep client interview and like traditional NPS, like how satisfied are you? But we go a lot deeper. And you look at the correlation between levels of satisfaction and actual true referrals from clients and quality contact touch points, which are in-person meetings and video meetings, but they are also high quality content videos, white papers, animations, etc. You look at that versus NPS, strongly positively correlated. When we look at NPS versus things like peer cohort outperformance, like did my portfolio, if I'm a 50-50 investor, did I outperform or underperform my other 50-50 investors? The correlation between NPS and actual outperformance or underperformance is actually really low, like single digit low. And people spend all their time thinking about performance and about like, I got to tell the story about my performance versus I need to deliver more high quality contact touch points that drive NPS. The other thing that video does, or things you can send someone, is it has a second life. It has a send on to my family member, send on to my work colleague, send on to my social media network that just so what happens, if done right, drives that unknown prospect back to your website. And you can start tracking that. That's what we're calling MarTech, like that marketing technology that drives client engagement, but it fuels your prospect pool as well.
We might have to do a follow-up part 2, talking just about MarTech, because this is an area that I think is so fascinating. People ultimately connect with people, and being able to articulate your mission, vision, value repeatedly in formats that your clients and prospects can consume is a 10Xer. It's a 10Xer. If you want to build enterprise value, it absolutely has to be a part of your formula. So I love that you brought that up. That'll be part 2. Okay, data. Moving on to data. We are, we've always said about our industry, we are living in a world where we are absolutely drowning in data and have no useful information. And it is a challenge. And we're sitting here in this really interesting transition moment where firms, like RFG and firms that are larger are building their data lakes. They're starting to explore what that means in terms of both their client experience, their advisor experience, how to make smarter decisions around business analytics. I certainly can speak, from our experience, there's a real allure to having control over your data after living for many years in a state of constantly trying to optimize and remove as much friction as possible by knitting together a best of breed strategy and relying on, vendors and what their roadmaps might be like, as opposed to our vision or our, others in the industry's vision for what they want to be able to deliver and how they want to support growth. So how do you think about managing large data sets. What do you think will be the difference maker for firms and advisors to thrive as it relates to taking control of their data?
Yeah, it's a massive, massive topic. I think the good news on data for us as an industry is no one disagrees that owning and curating and then making available or creating value from your data is like super critical. No one argues with that anymore. I would say when we started F2 9 years ago, that was actually a pretty hard sell, that you should focus on data. And in fact, we would sit down with clients and we wouldn't even put data on the conversation. We would talk about client engagement, new reporting and UMA and different concepts. But honestly, the conversation always ended up with data. But if we led with data, you just get the glazed eyes things, and tech guys, you're just trying to sell me a data project or something. But it doesn't happen anymore. People truly understand the value. What they don't always understand is how to think about that value and start to execute on it, because it is such a big concept. Where do I even start, Doug? Like, where do we even start the data conversation? And it somewhat depends on the size of firm you are and how complex you are. But the beginning of keeping and organizing in a secure way, super critical. Information about your clients' transactions, holdings, and things that your clients would have questions about, or your advisors would have questions about, great first start. So if you're multi-custodian, you've got Schwab, Fidelity, and Pershing, et cetera, data coming in, where is it going today? Is it going into all your different tools? Well, great. But if you need to get one single copy of all the corporate actions for some, NVIDIA or something, and you had to go to 4 or 5 different tools and the pricing sources are all different, you're going to have breaks in that information. You're not going to be able to provide a cohesive answer to your clients. And so in general, the good starting point is to get a data architecture. Either you can work with a data architecture firm to do it. I think that's what you're doing. Or you build one yourself, and you start with holdings and transactions and market information as the sort of foundational layer. You then quickly overlay any kind of CRM data, because CRM is sort of the lens upon which you want to look at that data. So I've got, household hierarchies. Well, if you think about household as a unified concept, you're going to fail immediately, because as advisors, we know we've got the compliance grouping, we've got the billing grouping, we've got the actual grouping, which is like 3 or 4 households together, like mom and dad's, IRs are separate. And a couple of different lenses. That's CRM data that goes in next. And then a lot of qualitative information. So how many times did I email them? How many times did they log into the website? What marketing information have they got? Did they click on that information? How much referrals have we gotten from them? Who is their COI for, accounting or for lawyers or et cetera, like other information layering on top of it. And ultimately, if done right, it gives you like the middle of your entire technology stack. And so that as you build that rigid data architecture, all the systems that you've got plug from that data source instead of each other. Right now, most firms get, their custodial information at the performance reporting tool, their trading system, and their CRM, same file, 3 different places. But all those 3 different places are going to do different things to the data. And so an advisor needs to go and find sort of a holistic answer. Sometimes the answers are different. Yeah. But when those tools feed from a central source, that's a hard thing to sell to an internal executive. Like, why am I building my own thing when they're going to send it to the downstream thing? Like, why would I do that? Well, the answers are you need it to get one consistent message. But once it is in one place, it does 2 things. One, you can start to analyze the data in totality. You come up with your own version of what the client sees, because the client sees you as one organization, not 5 different tools. And you can get like a consistent answer. The other one, probably the best answer, is if any of those vendors sort of underperform, you're not beholden to them anymore. Yeah. You don't rely on your performance reporting platform or your CRM as the anchor to truth. You can actually swap them out. The data actually exists someplace else. You can just plug someone else into it. And that leverage you have over vendors, especially as like they underperform or they get acquired or like, their PE backing sort of dries up and they stop innovating, is fantastic.
Yep. Yep. It is, it's so fascinating. And what I will say, just to echo this, is it's a little bit like you just have to start wading into the water. I mean, what we have found is that everything you just said is true, and you can easily get frozen of like, I want it all. like, give it all to me. Like, I want to control all my data. I want, you can imagine the castle that you can build once you have control over all the data. But then you get to this point that I think is kind of setting us up for my next block that I want to talk about, which is change management. So the advice that I have as it relates to starting to chip away at this big opportunity is that you have to just wade into the water. Pick one pain point that you want to start solving, get your data lake set up, solve for that pain point, and then it opens you up like, well, what if we did this? And then what if we did this? And then you're gradually going in, as opposed to we're ripping everything out and we're going to have this brand new, ecosystem, because that is challenging to manage. It's challenging to have the team, the talent, the time, the capital to be able to pull that off all at once. So if there's something that gets me really excited, at least as it relates to RFG, is for a long time, we've been vision casting on our whiteboards about the future state of the advisor experience. And this ability to have a single pane of glass where not only is it your hub for managing your client experience, but that there's true business analytics. And so you have at your fingertips the ability as an advisor to be making decisions where you spend your time, how you build your team, what are the implications to enterprise value. All of this is interconnected. And it's challenging because we really do live in a world with significant friction and switching costs as we try and go through the day-to-day of serving our clients and growing our businesses. And then we're like, okay, and today, I oftentimes will have conversations where they're like, today's my CEO day, when they're meeting with me to talk about their strategy or longer term decisions that they want to make around their team. And what's interesting is that if I look 3 to 5 years out and all of that data becomes more readily available at your fingertips and gaining the ability to go from 60,000 feet all the way down to 3,000 much more seamlessly, it's pretty exciting when you think about all of the demographics, this bull market for advice that we're living in, and then you couple it with data and you couple it with AI and you couple it with this kind of realization of the amount of enterprise value that advisors can build. You're going to have a lot of work ahead of you, Doug. There's a lot to do.
Yeah, it's bring it on, right? Like that's where seeing it done well, including at RFG, honestly. And just on that point in a second, for everybody listening to this, what RFG does better than anybody else involves the business in what is traditionally a tech, over the tech wall type of activity. And you probably don't know that you do this better than anybody else we work with, but to make business decisions involved in technology prevents a lot of stress of the technologist that doesn't get like a business user saying, no, I want this answer from my data, right, as opposed to, other firms just have data people do it. And when data people do it, they don't have the business context, the client context. Often the answers aren't relied upon because they weren't really invested in by a business owner. And you guys have done better at that than anybody else, just investing the business time into technology design and use cases.
Well, I appreciate you saying that. And I part of it is we're at the very beginning of what we're all going to be able to build. It's so exciting. So that brings me to change management. We have a saying here at RFG. It's one of my absolute favorites, which is disruption and innovation are two sides of the same coin. And what I think is so interesting about that statement is we truly, and I know you and I agree on this, we are living in a moment in time, like this is a bull market for advice. We will never see this convergence of factors that is setting us up, the generational wealth transfer, all the tech we've already discussed, the amount of private equity coming into the marketplace, the increasing expectations for what a client is looking for in working with an advisor. And yet our brains are just fundamentally hardwired to fear change. So how do you coach your clients around change from incremental edits in their technology to these like big, bold decisions? Like, How do you help your clients adopt that mindset for change?
Yeah, there's the old adage, like, advisors hate change. And I grew up saying that because I grew up having to get advisors to change. And it wasn't me. It was not, you can't quote me as saying this, but it was some very, very smart person. I said, no, Doug, you're wrong. Advisors don't mind change. Advisors hate coercion. They fear coercion. They don't fear change. What that means is, don't give me a tool to do something different than the value that I've built with my clients over my life, my career. Don't make me be a planner by giving me a planning tool. Don't make me be an expert on alternative investments by like adding alts to the investment platform or to the reporting platform, right? Don't make me have to be a salesperson because now I've got this prospecting tool in the CRM. So, and as business leaders, sometimes we want to make a change in the organization. Technology is an easy way. I'm going to go get that shiny new tool, give it to all my advisors, and like magic,
Right.
They all change their behaviors. They don't. People
Right.
don't change behaviors. They definitely don't change their value proposition. So I think on change management, when you start with really understanding, like sitting down with an advisor and talking about what's the value they bring to their clients, way before you talk about technology or any kind of change, and then work that change that you want to do back to that value proposition. It's a total Jedi mind trick. Like, I'm guaranteed this is going to get me in trouble, but if I can tell you that the tool we're launching or the innovation, like the new technology, the integration or some whatever new thing, actually helps you be a better advisor the way that you believe that your clients are with you, you get like 95% adoption after you start that process. And it's a bit of a trick. But if you can make the advisor better by technology, not make the advisor different by technology, you win almost every time.
Which is almost a purist application of like what technology is designed to do. Mm-hmm. I love that. All right. So I want to talk about mistakes. And, so many firms face margin pressure. They are, the facts on the ground, organic growth is basically non-existent in our industry. We're bumping around 2 to 3% on average. Tech debt and a succession planning crisis. And I read a quote by one of your colleagues who I think is just so smart, JC Stanton, and she said, open ecosystems with broad choice lead to high tech costs over time and a potentially fragmented experience. Can you expand on that and the risk to the strategy in light of the future landscape and all this opportunity that we've kind of talked about up to this point?
Yep, definitely can. We mostly work in the United States, right? That's like 90% of what we do is the United States. But we work enough in other countries to see other norms and sort of advisory businesses and make decisions. In other countries, the concept of spend for integration and spend for like fewer numbers of tools that just natively are more integrated is much, much higher than the United States. And because I'm an American, I grew up here, very proud of it. Like, we want the best of everything. And so what you see in the United States, and this befuddles international wealth management firms that come here, and definitely befuddles all-in-one applications from Europe and Canada and Australia and things that try to come here, is that most advisors that we work with in the United States would rather have 6 of the best technologies on their desktop and have to manually figure out how to make them work together than have one that does all those 6 things at like a B+ level. Mm-hmm. And I chalk it up to culture. So our job at F2, just advisors in the United States, is to sort of not necessarily change that thinking, because I'm that same way myself. I want the best of everything all the time. But it's to think about adding the cost of inefficiency to the overall pie. And if your CRM vendor also has, an account opening workflow, you may not need to go to an account opening workflow technology to do it, even if it's the best. Yeah. Or if my financial planning tool has a client website or client portal, it maybe isn't the best, but it's integrated and it's got great client communication. Maybe I'm okay taking a B. And I think that where people struggle is, Doug, how do we know which ones to go for and which ones to sort of be okay. And it comes kind of back to that thing on change management. What is it that we do great? What is it that our advisors are really well known for? Is it planning? Is it generation wealth transfer? Is it, great portfolios with bespoke, highly customized outcomes for clients? Whatever that thing is. In general, the best decisions are made when you take that thing that both culturally aligns our current team and what our clients expect from us, and you use the best technologies around that, and you make those A+. Get A++, extra credit, AP level tech on the things that culturally help you grow and be a better version of yourself, and go for the A- and the B+, and maybe even a couple of C+ on the technologies that, honestly, if you got the best or the worst, it ain't moving a needle.
Right.
No client's going to join you or leave you because you picked an A+, or just go for the low cost versions of those things, or the integrated versions alone. And I think that's where a lot of not just cost of technology dollar, but cost of time,
return on time,
ROT, right?
ROT.
We're going to coin it right here, Shannon. This is going to be a thing.
I
have a whole backstory on this entire thing, like benchmarking of that same ROT. But the return on just inefficiency, even using the tools, because if you got 6 different tools that are not integrated, the chance of using all of them to their max is like nil. You're not using all of them.
Yeah. I love that. And I think that's a really helpful framework. Certainly we think about it in the way that you just shared, but for advisors to think about technology, like, what do I want my superpower to be? This is that old adage of like, don't spend a bunch of time trying to make your weaknesses great. Spend a bunch of time making your greatest strengths even better. Like, lean into your superpower and make sure your tech aligns with that superpower so that you get that amplification from it. Okay, so now we're going to do a little name dropping. 3 very hot topics in the tech world that I'm hearing a lot of buzz around. Long-term care, how to make that easier, faster, more efficient. The rest of it, especially important for women. As we see that generational wealth transfer unfold, by the year 2030, women will control 67% of the wealth in this country. They're number 2, according to the CFP study that just came out, I think, in February. The number 2 priority for them is long-term care planning. So long-term care, tax and estate planning, you literally cannot turn around without someone talking about tax and estate planning. And my favorite, because I love organic growth, lead gen. So you want to do some name dropping? Any cool tech that you guys are looking at that's a little earlier stage, or that you're already well along, having done some due diligence in lead gen, long-term care, and tax and estate planning?
Yeah, I mean, lead gen, we see our favorite area for lead gen for real organic growth is in the social content space. Sort of getting great content to clients that can then, or prospects that can then amplify in that social space. So 2 of our favorite are Catchlight and Bento. In that space, they produce content for clients that advisors don't have to create, based on information that's already in your CRM. It is the easiest way to get high quality content out there in this space. I think long-term care, we like Water Lily. It's a newer technology that really looks at getting that sort of the costs associated with long-term care and just that conversation into client discussions, and helps to kind of project out more of the future. And I would say the other one probably would just be, we kind of talked about AI a little bit. Like, our favorites are, Zox is great, but we're seeing great with Zeppelin AI as well, and Jump as well. So I think if you're not one of the 50% that's going to use it by the end of the year, like, those are the ones that we think you need to be thinking about.
I love it. It's like we're at the cocktail party talking about the cool kids.
I know, we are the cool kids. Are you kidding me? Like, they're talking about us.
All right, to wrap us up, I always like to end with share either, I'm a quotes girl and I love to read. So share with us either one of your favorite quotes and why, or one of your favorite books and why.
Yeah, I would say as a business founder that scaled a business and then worked with a PE firm to get even faster scaling, much like our clients. Like, F2 is acquiring other services and technology consultancies around us. It weirdly mirrors what our clients are doing. There's a great book called Predictable Success. And in full transparency, my very good friend Luke Winsowski from 49 Financial referred that to me. And because he saw where we were in our growth trajectory, he's like, you need to read this book. Whenever like a client tells you need to read a book, like you should read a book. But the premise of the book, just the quote of the premise of the book is, the old adage, what got you here ain't going to get you there. But it's a much more detailed organizational view of that same thing. So as we were growing as a smaller firm, the decisions could come from the top, right? It was Liz and I and our executive team making decisions down in the organization. We got to a phase, definitely after a PE investment, where that top-down leadership is just not going to fit our organizational structure. We had to actually convert to making the individuals at the second, third levels of our organization have accountability and the authority to solve problems themselves. And when we started to do that, and that the collaboration and problem solving could be done down lower, my job got a lot easier because it could just be thematic, right? Mm-hmm. It's like, now we as an organization, here's who we are, here's who we believe in, here's how we solve problems, here's how we come across the clients. I did never have the capacity or probably the intelligence to solve all those problems. But when you can federate that down to your lower levels in your organization, it makes a tremendous difference. So
I
definitely
love
recommend that book.
I haven't read that one, and I've got spring break coming up. So as all the crazy spring breakers, I'll be reading my Predictable Success on the beach.
The audiobook is also good. I did both. But yeah.
Oh, I love it. Thank you so much for that. Well, Doug, I'm definitely going to, get us booked maybe later in the year to do part 2 and talk about MarTech and some of the other topics that we hit on. You are one of the brightest minds and a great thinker in our industry and visionary. And thank you so much for being a guest on Disruption Blueprint. It was awesome to be with you today.
Thanks so much for having me, Shannon.
Thank you for listening to the Disruption Blueprint podcast. Click the follow button to be notified when new episodes become available. Visit our website at www.rfgadvisory.com or schedule a call on our advisor resources page. And don't forget to click the follow button to be notified when new episodes become available. Content here is for illustrative purposes and general information only. It is not legal, tax, or individualized financial advice. Nor is it a recommendation to buy, sell, or hold any specific security or engage in any specific trading strategy. Information here may be provided in part by third-party sources. These sources are generally deemed to be reliable. However, neither our guest nor RFG Advisory guarantee the accuracy of third-party sources. The views expressed here are those of our guest. They do not necessarily represent those of RFG Advisory, its employees, or its clients. This commentary should not be regarded as a description of advisory services provided by RFG Advisory or performance returns of any client. The views reflected in the commentary are subject to change at any time without notice. Securities offered by registered representatives of Private Client Services, member FINRA SIPC. Advisory services offered by investment advisory representatives of RFG Advisory, a registered investment advisor. Private Client Services and RFG Advisory are unaffiliated entities. Advisory services are only offered to clients or prospective clients where RFG Advisory and its representatives are properly licensed or exempt from licensure. No advisory services may be rendered by RFG Advisory unless a client agreement is in place. RFG Advisory is an SEC-registered investment advisor. SEC registration does not constitute an endorsement of RFG by the Commission, nor does it indicate that RFG or any associated investment advisory representative has attained a particular level of skill or ability.